Hi traders, welcome to the part 2 of STAN WEINSTEIN Trading Strategy. In part 1, I had discussed about the entry and also the trading setups, and I also discussed about how to set up STAN WEINSTEIN's relative strength. Everything was discussed. I also briefed about how to exit the stock when it is time. In this part 2, we will be discussing about how to identify proper stand stages, because most people make mistake here, and how to avoid the mistakes and identify correct stages. And I would also discussing from my experience how I value or how I grade these stages as grade A, B, C. These gradings are not given by Stan Weinstein or in his book. This is completely based on my experience. I will be explaining these grading structures also in the upcoming slides. So bear with me, kindly watch this video till the end, because the things I am going to discuss might help you to become a better trader and also to trade stand structures in a better way. So come, let's go over them. So most traders fail in identifying the current stages of stand setup, as they are obsessed with this one picture that is found in the internet quite frequently. What is that picture? This is it. So whenever you search for any stage analysis by Stan Weinstein, you will immediately get these pictures available in the internet. What is wrong with this picture? There is nothing wrong in this picture, but it is only the interpretation of the viewers or the readers that is uh, becoming wrong. Okay? Because they get highly obsessed with this picture. So what they usually do is they try to find the exact same structures in real-time trading also. Real-time trading is completely different from what you read in theory, because in real time you have to adapt according to your strength, and you should avoid doing unnecessary mistakes. Okay. So as I said already, here you can see stage 1, stage 2, stage 3, and phase of decline, that is stage 4. After the stage 4, the stock again forms a stage 1. This is what you usually see in internet. Now, what fact is missing here is Stan advocates that stages to be found within a broader stage 2. This is the most ignored fact by the fellow traders. What I mean by broader stage 2 is I will be discussing with in the comment slides. Don't get confused even if you don't get it. Also, the left side of the chart should be clear of resistance, or it should be off with minimal resistance. The resistance should be very minimal. The left side of the chart should be clear actually, or at least with minimal resistance. So according to these three setups are nothing but my grading by my personal experience. Grade A, B, and C. Grade A is the superior. That is the most favorable setup according to my experience, but it is very rare to find. You will find it only in the strongest of strongest stocks. And grade B is the second one, which is common and easy to spot in all market conditions. It gives good risk to reward ratio, but the winning probability is little less when compared to that of grade. Okay. Grade C is the third one, which is the poorest of all the structures, in my opinion, my humble opinion. um, the probability of winning is very low. One thing I would like to tell, there might be some traders who have the ability to get good risk to reward ratio in grade C also. But for that, you need some amount of expertise. Okay, because um, for it to work, one should have good knowledge about the turnaround stories. They should be well aware of the fundamentals of the stock. They should know the company in and out. And most importantly, they should have patience, because the stock will keep on whipsawing up and down. It will hit your stop loss, again set up, again move up, and then again come back to your stop loss price. So it will be giving many whipsaws. So if you are trading grade C, the structure I will be discussing in the coming slides, please wait. Then you should have clear knowledge, and what you are doing, you should be well aware of. Okay? So coming to this grade C, I will be going from grade C, B, and A, because grade C is the one which you should avoid. So it is always better to know which structures to avoid rather than knowing what to trade. Okay, first when you know how to avoid mistakes, then the rest becomes a little bit easier in my opinion. So this is the stock, the famous stock of SPAN. I taking this stock because this is in the Indian stock market. This was once their darling, and then the stock fell off, and it is now trading around 70 to 80%, and it's all-time high. Okay. So this is always an example to avoid this type of stocks. Okay. Why I am saying this is grade C setup or poor structure? As you can see this after a consolidation, the stock broke out here, and it was a stage 2. Okay. After a stage 2, the stock started consolidating in stage 3. And after stage 3, what happened? Stock finally broke out this consolidation. So, and then it went to stage, okay, right? After such a decline, the stock is now forming a base, or you can also call it as stage 1. Okay. So, if the stock breaks this structure from here, will it be better to buy this stock? In my opinion, no. Why? Because you can see on the left side how much of resistance is there. Even though the resistance is of 2 years or 5 years old, I would say I would rather skip this stock instead of trying to uh, see how it goes and all, because this stock is already lot. It has beaten down a lot. What is the guarantee that this stock has the ability or the fuel to run to the all-time high again? I don't think it is easy for this stock to run. Okay. And also one more thing, this stage is not in a broader stage 2 structure. What do I mean by that? See, this is the previous stage 2. Okay. Once this previous stage 2 has happened, stage 3 happened, and then stage 4 happened. But this stage 4 has broken this entire stage 2, and it has gone below this stage 2 structure. I hope you can understand that. I will once again said, I will tell you once again. See, this is stage 2, which was the initial stage 2. Then it formed the stage 3, and then the stock broke and went into the stage 4. And this stage 4 has broken this previous entire stage 2 structure, and it is in a down trend, complete down trend. So this structure, I call it as poor because I don't think this structure works well. Okay. I will also show some other examples for this kind of grade C setup. So this is another stock idea or Vodafone. You can see here also after this stage 2, the stock formed this small consolidation. Then it went into stage 4, and then it formed a small consolidation, which is again you can call it a stage 1 also. And then instead of breaking up, it started to fall down, and then it came to stage 4, reached stage 4. So this decline has happened, completely breaking the previous stage. Okay, this is previous stage 2. This stage has been completely broken, and now the stock is trending down. Now this is forming a stage 1 type structure, right? But as you can see here, I will just delete it and zoom the chart. As you can see here, can you see here? The stock has actually broke here. The stage 1 was broken. Again, it was broken here. But what happened? Immediately, once it broke, it started trending down because there is heavy resistance down here. The probability of this stock to perform as it performed in its previous cycle is very, very low. That's why I call this setup as poor structure. Okay. So, in my opinion, I will try to avoid this structure completely because it will create you frequent whipsaws. Your patience will be tested, and you will be wondering how to crack this structure. And let me be honest, you need not crack the structure because you can completely avoid this kind of complexity. Now, I will also show you another example. So this is the recent chart. Even if you are watching from any other country, you can just search for Gensol Engineering. This stock was in the recent stock. The stock has fallen heavily. The stock after a stage 2, it formed a decline, and then it formed stage 3. Once this stage 3 was broken, you can see this stage 4. What's the problem with this structure? Why it is poor? It has completely engulfed the previous stage 2 structure. Let's see here, this is stage 2. This structure was completely engulfed, and now the stock is trending lower, lower, lower. For example, in a couple of years or even a couple of months, if the stock stops to form a stage here, which according to Stan is stage 1, and then finally it breaks up, will I buy? No, I won't buy, because this structure has already been a severe compromise. For this stock to go up and then reach new highs are very limited, and in my opinion, it will test my patience a lot. So there will be lot of good stocks available out there which I would like to buy rather than buying this. Okay, that's why I say avoid PHC. Now this is a perfect example of grade B setup. These setups are very common. Even if you, whenever the market trends down, you can just go and see. We'll see a lot of stocks showing this structure. Why? Because with the market, the stock also goes down. Once the market stabilizes, it forms a stage 1 structure and makes up. So here, this is good setup with good risk to reward ratio, and it is common and easy to spot. Why? See here, it was a stage 1. How beautifully stands structures works. You can see stage 1, RS becomes positive, stop broke out, and it went into stage 2. Beautiful run up. The RS is always positive, and then after this point, stock started to form a small stage 3, or it broke the trend line. If you draw a trend line here, this is where the trend line is broken. And then it formed a small stage 3. Don't look for very conventional stage 3 structures. If you are very newbie, you will be looking for a perfect stage 3 like this. Okay? Don't look for those conventional structures, because in reality, those conventional structures are very rare to appear. Even if you see here, you can't say that this is a proper stage 1, because the low is here and then stock goes. What you have to do is you just have to understand that the stock is going in a consolidation mode, and then it breaks out finally. When it breaks out, what you have to look, whether the volumes are high, whether the RS is high. That's it. That is triple confirmation pattern, which I already I went a little forward. So where I was, yes. After this stage 1, it formed the stage 2, then it formed the stage 3, and then it broke down into stage 4. Okay. But if you see, this stage 4 is well within this broader stage 2. It has not broken this point here. So it is in a broader stage 2 ceiling. That is what I am saying. The stage should be formed within the broader stage 2. The stock is already in stage 2. This stage 2 was not engulfed by this stage 4. Can you understand this? After a while, the stock broke out. The triple confirmation pattern, the stock moved. This is what I am saying. This is what you should look into. Now I will tell you another example also. And this is fine. See, after this breakout, the beautiful break. Once the breakout happens, see the volume coming here. The RS is always positive. See how STAN structures works not every time. Most of the time it works the same way. When it doesn't work, you just have to exit with the stocks. So this is stage 1, and now it is stage 2. Then it started trending. So it broke the trend line, then went below the 30-week moving average. Once it is below 30-week moving average, RS turns negative, you are out. Okay. In the first part of trading strategy, I had explained the strategies, how to exit the stock. If you have not watched, you'll give the link in the description. Kindly go and watch that first part. Once it broke, it formed a stage 1 again, where this is stage 3 and 4, and then the stage 1 again, and then it, after it broke out, stage 2, stop. You can see when it broke out, see the volume, see the RS. Hope this is clear. And coming to the grade A setup, which I say it is more superior, and it is the most rewarding setup, I will say. But one point you have to notice, this setup is very hard because stock reaching a new high when the market is trending lower, or when the market is not good, is very rare. Even if you are in bull market, it is very rare to find the setup because the stock would already have been stage 2 when the bull market is there. So this setup is very hard to find, but once you find this setup, don't leave this. This is one of the examples of beautiful breakout apparel industries. And you see, this is a beautiful head and shoulder pattern that formed, and then the stock broke out into all-time highs with ATH. You can see the stage is now within a broader stage 2. The stage 2 is not broken yet, and the stock forms within this stage 1 gets formed within the broader stage 2, and the stock breaks into all-time highs. So you may think that previous stock was also resembling the same thing. No, I will tell you why. Because you see, in the previous example, if you see in the previous example, the stock breaks but not into the all-time high zone is here. Okay, but the stock breaks here. But in this example, the stock breaks out the stage 1, or you can you can call it a stage 3 also, because after stage 2, the stock forms a stage 3 and then breaks into stage 2. From stage 3 also, you can form into stage 2, because it all depends on how the stock is at that current form. If the stage 3, it has broken down, it will be called a stage 4. I hope I am clear. If you have doubt, kindly watch this video once again, you will understand. Okay. The stock breaks into all-time high here, while in the previous example, that is grade B setup, stock breaks out, but not in the all-time highs. It just breaks the stage 4, stage 1 setup and then goes into stage 2. Here, the stock is almost in the stage 3. Okay, stage 2 and then stage 3 is formed. From stage 3, instead of going to stage 4, the stock is transformed into stage 2 structure. This is what I'm saying. And it is breaking into the all-time highs. It has broken the all-time high. And once it broke out, you can see how beautiful the stock has moved out. And triple confirmation pattern, price breaks out, volume, RS. Okay. So coming to the next example, this is another grade A setup that is currently in the making, and it's already broken out here. At the time of making this video, the top was almost here, and then now it is trending higher. You can watch, you can see that. This is Bajaj Finance stock. After this beautiful stage 2, top goes into stage 3. Okay. From stage 3, instead of breaking down into stage 4, the stock from stage 3 picks up and breaks up again into all-time highs. So this stage will be now called as stage 2. So the stage 3 is transformed into stage 2 without forming stage 4 or skipping stage 4. Okay, this is what I want. This is the most powerful structure, particularly when the market is trending lower. If you see a stock doing this, keep that stock in your watch list. Again, this is not a recommendation. Kindly don't go buy Bajaj Finance now. The stock is well above its buy point. It's not my recommendation at all. I am just telling those things for the educational purpose only. Don't take this as a trading advice. I'm not entitled, or I am not certified to give you trading advice, so kindly don't bring it. Okay. So once this stage 2 happens, the stock broke out, volume here. If you zoom in, you can see the volumes coming in, and then you can see the RS also breaking into the positives. Great. So that's it. And I will also see another example. This is also in the making. It is APL Apollo Tubes. It's of the beautiful stock that is setting up, and I think it has broken out now. Yes, it has broken out now. So this is another setup. Can you see here what happened here? This was a beautiful stage 2. The stage 2, stock went into stage 3. Once it's stage 3, if it breaks up this stage, once it breaks up, it is stage 2. that is stage 3 converting directly into stage 2 instead of breaking down and converting to stage 4. This structure is the most superior structure in my opinion because the stocks breaks into all-time high zone, and whenever the stock breaks into all-time high zone, there is no resistance left in the left side. Okay, no resistance. No resistance that is left on the left side. So the stock is entering into the unexperienced territory. So stock has no resistance and it has the ability to run. That is what I want to tell. And as the stock breaks out, you can see you have to see the volume getting picked up here. The volume picks up and this becomes positive. Then this can be a good top pick for your watch list. Again, not a recommendation. So next. So that's it today, guys. This is what I want to tell in this second part of trading strategy by STAN WEINSTEIN. So I will be coming up with a new video where I will be discussing about which of the market conditions to trade a STAN WEINSTEIN structure, and I will also be discussing about some of the modification in STAN setup that STAN recommends in current stages, and how to use STAN WEINSTEIN setup in smaller time frames, and how to use STAN setup to trade in indices. Those things will be discussed in a part by part manner. Please give me some time because these things are not much talked about. Basically, when you search for STAN WEINSTEIN, just the trading strategy comes, but applying it in real time requires some effort and the proper understanding of what STAN says. Okay, STAN says something beautiful that is versatile, universal. Even if you are watching from any part of the world, even if you are trading any market or any asset class, STAN's rules or rules that works every. So that's it for today, guys. So we'll meet you soon in the next video. If you like my video, kindly like, subscribe, and if you are having some doubts, you can ask me in comment. If you feel that I should improve on something, please let me know in the comment section.